Welcome back to Digital Asset Report. Bitcoin is starting the week just above 70,000 and Ethereum is back above 2,100 after a sharp intraday swing. The tape still feels macro sensitive, but the bigger story over the last 4 days has been market structure, funding, and settlement, not just price. The biggest news last week is that the CFTC gave regulated firms clear guidance on how they can use crypto in derivatives markets. In new FAQs published on March 20th, the agency said certain firms can count some customer crypto, including payment stablecoins, toward account shortfalls after applying a discount to its value. It also said firms can use their own payment stablecoins, but not Bitcoin or Ether, to help meet reserve requirements in customer accounts. For now, during the first 3 months at least, the only crypto assets firms can accept as customer margin collateral are payment stablecoins, Bitcoin, and Ethereum. Moving to macro, the situation in the Middle East continues to be tense, with Polymarket putting the odds of a ceasefire by year-end at 78%. It also puts the odds of U.S. forces entering Iran by year-end at 61%. Earlier today, President Trump provided an update on negotiations with Iran, saying they want very much to make a deal. We'd like to make a deal too. Trump separately said the U.S. is very intent on making a deal, describing talks as very intense, and announced a 5-day pause on threatened strikes against Iranian power plants. Meanwhile, Iran has denied that any such negotiations are taking place.
We have had very, very strong talks. We'll see where they lead. We have major points of agreement. I would say almost all points of agreement. Perhaps that hasn't been conveyed. The communication, as you know, has been blown to pieces. They're unable to talk to each other. But we've had very strong talks. Mr. Witkoff and Mr. Kushner had them. They went, I would say, perfectly.
News of these negotiations sent markets soaring across crypto, TradFi, and precious metals. But meanwhile, in Europe, the rail story kept building. ECB Executive Board member Piero Cipollone said tokenized capital markets in Europe have moved from exploration to production. Cipollone said European issuers have placed close to 4 billion euros in fixed income instruments since 2021 using decentralized ledger technology. He also said the Eurosystem's Pontes Bridge is set to launch in Q3. The longer-term Appia roadmap aims to deliver a broader blueprint by 2028. The message from Europe is that tokenization is becoming a policy-backed market structure project. And in digital asset treasury news, Strategy announced Monday 2 new ATM programs totaling $42 billion, split between $21 billion of MSTR common stock and $21 billion of STRC preferred stock. The company also introduced a new $2.1 billion ATM for its STRK preferred series. This is on top of a roughly $30 billion still available across existing programs, giving Strategy substantial firepower to continue accumulating Bitcoin, of which it now holds over 762,000 coins. Meanwhile, Grayscale filed an S1 on March 20th for the Grayscale Hype ETF. The trust is designed to hold the native token of Hyperliquid Hype, and the filing says the shares are expected to list on NASDAQ under the ticker GHYP. The prospectus also says the trust's objective is to reflect the value of Hype held by the trust, including staking consideration if staking is eventually implemented. The filing is a sign that the crypto ETFs may start to be tied directly to on-chain infrastructure. And in security news, Resolve's USR stablecoin depegged after an attacker used a compromised key to mint tens of millions of unbacked tokens and pull roughly $23 million out of the system, according to Chainalysis. The protocol halted operations, and the incident appears to have come from off-chain key management rather than a flaw in the code. Another reminder of the importance of secured infrastructure for digital assets. With Bitcoin and Ethereum still holding steady, the higher signal is in the TradFi integrations moving forward. Wrapping it up for today, Europe is pushing tokenized market rails towards production. Strategy is dramatically expanding the capital markets machine behind its treasury model, and Grayscale is still widening its ETF pipeline. This market is maturing through rules, wrappers, and plumbing in real time. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.